views and opinions expressed in this program are those of the participants and do not necessarily reflect the views of BronxNet or the program underwriters.
Great day, everyone, and welcome to New York City Hispanic Chamber of Commerce presents Meetings with the Minds in partnership with BronxNet Television. As always, we are proud and honored to keep our members connected, our partners, and our affiliates informed of every possible resource that can benefit our community. I am so excited to introduce to you Mr. John Kelly. He is the branch manager of Cross CountyMortgage. Hi, John.
Hello, how are you?
Good. Thank you so much for being with us. We're so excited with the connection. I know that our real estate chair, Greg Segranis, made sure that we post this conversation. It's very, very important to discuss mortgages, low interest, refinancing, forgiveness versus deferral. So you are literally here to enlighten us and to unconfuse us, right? So that's an important resource. How is your family, first and foremost? Mm-hmm.
Thank you for asking. Thankfully, everybody is well. Nobody has the virus. And, besides us all going a little stir crazy in the house, other than that, life is good. Thank God. And thank you for asking.
You got it. Amen. May they continue to be healthy and strong for sure. So let's get this thing started. John, can you tell us what it means to refinance? Why is now a good time?
Well, basically what refinance is you already have a mortgage. Typically, your rate has to be higher than today's rates because today's rates are at all-time lows. So let's say, for instance, you bought your house 8 years ago. Your interest rate was 5%, which is a very good rate, and you're paying $2,500 per month. I can take that same loan, refinance the mortgage, give you an interest rate in the low threes, and save you $300, $400, $500, $600 per month. So it's a great tool to basically lower your monthly payment. You can also take so let's say your house now has gone up in value, and you're thinking it's a good time to make some other investments, or you just, with these uncertain times, think it might be a good opportunity to put some additional funds in the bank just in case. Mm-hmm. You can refinance, pull some equity out of the house, and lower your interest rate. So most likely you will lower your payment and be able to take cash out of your property, kill two birds with one stone. So unfortunately, these are some trying times. Mm-hmm. At the same time, there's also opportunities to be had in any difficult situation, and refinancing is definitely one of those opportunities available to everybody today.
Did the refinance come because of did the low interest rates come because of the COVID-19, or the interest rates have been lowering even before that?
Great question. A little bit of both. So I remember, because I sent Greg a text that evening. It was a late Sunday night. I would say about several months ago, the Fed announced that they were lowering the Fed rate to 0. I remember it was a Sunday night, and I saw this and I was shocked. And I immediately sent out, a dozen text messages to close friends of mine that are in the real estate business. Greg was one of them. Mm-hmm. At which point in time, what that basically means is the rate at which the banks are lending money overnight, the government is lending money overnight to banks, the rate was 0, which in turn should bring interest rates down significantly as far as banks are concerned. The rates did come down a little bit, but they should have come down more. And shortly thereafter, rates actually went higher. So it was a very tumultuous time, and this was roughly 4, 5, 6 weeks ago. Since then, the rates have continued to go down, and right now, and I've been in finance for 25 years, these are the lowest interest rates that have occurred in in all of financing in the United States of America. So there has never been lower rates ever. And so it's a combination of a perfect storm. The Fed lowering the Fed rate to 0, and COVID. So it's double factors, but the good news is rates are ridiculously low.
Okay, so this is definitely an opportunity. How long does the process take?
Start to finish, in most cases, 2 weeks. It's a very simple process because keep in mind, you already have a mortgage. So all I'm doing is taking that debt and just refinancing it. A purchase transaction probably takes about a month. I would say most refinances can be done in less than 2 weeks from the comfort of your home. You don't need to come to the office. We do everything via email. And then when it's time to close, we send the closer to your home. So it's really a painless process.
You know, this is painless and COVID secure, right? So this is
Right.
how we maintain social distance, and this is how we rise to the occasion and change our business models just a little bit and still deliver the goods.
Of course.
Pretty much. What are the costs and fees involved? And can you talk to us also a little bit about what CEMA is and CEMA, CEMA? And
Yes, ma'am, that is it. Correct. So what happens is the refinance fees are pretty much identical to the fees you would occur when you purchase the house. You have your title fees, which, these fees have nothing to do with the bank. These are what I call third-party fees. You have your title fees, which means we have to find a title company, and we can use any title company you prefer. That title company does a title search and gives you title insurance. That's going to cost you a few $1,000s. You then have what's called your escrows. Your escrows are your taxes, meaning your homeowners taxes, and your homeowners insurance. We have to prepay a couple months of taxes and insurance, so we add that to your loan. You do not pay any money out of pocket. What we do is any fee associated with the refinance process, we add it to the loan. So the only out-of-pocket expense on a refinance transaction is the cost of the appraisal, which typically is anywhere from $400 to $500. That's it. The positives are you skip 2 months payments. So although we are adding debt to your new mortgage, it's minimal. And two, right off the bat, you're skipping 2 mortgage payments. I'd like to now talk about CEMA. The beautiful part about CEMA is, as I said earlier, when you purchase a house and you refinance, pretty much you have the same fees. One of the biggest fees in the purchase process is what's called mortgage tax. Mortgage tax is 1.8% of the loan size. So if you're buying a house for, let's say, $500,000, New York City charges you 1.8% in mortgage tax. That's $9,000. Fast forward 2 years later, you're looking to do a refinance. Let's say you still owe $500,000. Just to have simple numbers, you would typically have to pay that $9,000 in mortgage tax again. What I offer for you is I will do what's called a CEMA transaction. What that means simply is I get my bank attorney to take care of some documentation for you. We inform the banking department in New York City, hey, this gentleman or this lady paid this mortgage tax 2, 3, 4 years ago when they purchased the house. And by doing that, it helps you not, you essentially do not have to pay that mortgage tax again. So it's a huge savings. I offer it for everybody because I hate to see anybody pay those taxes 2 times. So it's just a great way to save money. And so you basically cut the closing costs in half. And it's just a really smart thing to do. Save some money and, not pay the same fee twice.
Is this a common practice with mortgage companies, or is this something that Cross Country decided to just take on?
Well, I would say anyone can do it. Some guys don't. In some deals, it doesn't make sense. Reason being that, there is a cost for the CEMA, and it depends on who you currently have your mortgage with. So if your mortgage is with Wells Fargo, the fee might be different than if your mortgage was with us. Typically, it's going to be, $500, $600, $700 fee. But I'd rather see somebody pay a $600 CEMA fee than pay $9,000 in taxes. The only time I do not offer it is if the loan amount is so small that there's really not a great benefit.
So how do I qualify? How do I know if I qualify for refi?
Well, typically, I would say if you qualified for the purchase of the house and things haven't really changed, meaning you still have your job, you're still working, you haven't had a dramatic loss in income, you most likely will qualify for that refinance. What you can do is I have myself and my staff, of which my staff is all bilingual. Everyone speaks Spanish. A 60-second phone call to my company or to one of my guys, we can pretty much, we can estimate literally in 60 seconds whether or not you'd be a good candidate. At that point in time, we'd ask you for some simple documentation, and we could confirm with 100% certainty within 24 hours, one, whether or not we could do the deal, and two, what the exact benefit to you would be, meaning how much money can you save, how much money can you take as cash out, so on and so forth. So it's really, we charge nothing for that. I'm happy to do it for you, and ultimately it's all it is a 60-second phone call.
Now, if a person owns more than one home, can they refinance for all their homes?
Absolutely. So what happens is if you own multiple homes, one home would be considered your primary residence. On a primary residence, I can do up to 8. So let's say you have a primary residence that's worth, just to throw a number out there, $1 million. On a primary residence, I can do a cash out loan up to 85%. So what that means is if the value of the property is $1 million and you owe 500K, I can go up to 85% of the $1 million, refinance your first debt of 500,000 and give you a check for $350,000 at the closing. On an investment property, we're capped at 75% of the value. So whether it's an investment property or whether it's a primary residence, your rate today is significantly lower than it was just 3-4 months ago. But most importantly, it's really lower than it was 3 or 4 years ago. So if you have investment properties or primary, you're crazy not to give us a quick call, because you're under no obligation at any time. There is absolutely no cost to you. And like I said, in 60 seconds, we can determine if this is something we should explore any further.
Okay. Also, as soon as COVID hit, we started hearing these words, hey, deferred mortgages, right? So this is changing the topic just a little bit. I myself, of course, called my mortgage company. My husband did, actually. And, our payments were, I guess, I don't want to use the word deferred, but are they going to be deferred? How are they going to be charging us, or do we have to pay a full lump? Like, what's going on with that?
Well, for me to give you a direct, exact answer would be misleading, because it really will be done on a case-by-case basis. But here's what we're looking at right now. When you go into forbearance, and I have a few customers that currently have gone into forbearance, what basically happens is they're going to say, hey, you went into forbearance in April. You do not have to make your April payment. You do not have to make your May payment. You do not have to make your June payment. However, in July, you have to make all 3 payments in one shot and make July's payment. So let's say, for argument's sake, your mortgage payment is $2,500 per month. You skipped April, May, June. That's $7,500. Now in July, you have to come up with $10,000, because you have to pay those 3 previous months plus July. So unfortunately, a lot of people aren't aware of that. You also want to be a little bit careful with forbearance, because if they mark you late on your mortgage, which unfortunately has happened to a few of the individuals I'm doing business with, your credit score can drop up to 88 points immediately. And once you are 1 times 30, meaning once you have 1 late payment on your mortgage, it might make it impossible to refinance your house for up to 12 months. I'm not saying it's in every case, but that is possible. I'm doing a few refinances right now for people that did go into forbearance, and the process is really simple. They have to contact their bank that they went into forbearance with, tell them, hey, I want to get out of the forbearance. My customers were then forced to pay their April payment with their previous bank. Obviously, they have to pay May, but I'll be closing these loans in June. And here's the beauty of it. So you did the forbearance to basically put hold on your mortgage payment for 3 months. The negative of that is, 1, it might hurt your credit if it's done improperly. But 2, and more importantly, you then have, after 4 months, you have to make 4 payments in one shot. If you refinance instead of going to forbearance, it's a much better process, because now, 1, we're lowering your payment significantly. And in the process of refinancing, you skip 2 months payments. So let's take the exact same scenario. You went into forbearance in April, so you're avoiding April, May, and June's mortgage payment. The downside is, coming into July, you have to make 4 payments in one shot. If instead you decide to refinance, we would refinance in June. You skip 2 payments altogether, and now going forward for every month for the next 30 years, your payment is significantly less. So if you're in a position where you truly cannot afford to make your mortgage payment, and forbearance is the only thing you're capable of doing, then it's a great tool. If not, I would say give me a call because I can reverse the process, bring your payment down. In one case, I'm lowering a guy's payment right now, $1,100 a month, okay? He did an FHA loan with me just over a year ago. What I'm doing on the new loan is I'm removing the FHA mortgage insurance, which is $550 per month, because he now has enough equity in the property where he does not need to pay that insurance anymore. And on top of that, his rate is going from 4.75 to 3.25.
Yeah, thank you for educating us on this because it was very confusing for many people. And using, throwing the word deferral made many homeowners believe that, hey, if your mortgage payments ends in January of 2021, now you just have to, make the other payments until April.
There's a lot of misinformation. And I even myself, as a gentleman who's been in the business for many, many years, I was confused.
Incredible. Yes. There's a lot more to talk about on this, and I think every person will have their own individual journey with this. So how do we get in contact with you to make sure we get that personalized information that we need?
My name is John Kelly. My office is conveniently located on Morris Park Avenue in the Bronx. And as I said, I have an underwriter in-house. So it's not like I gotta ship these deals out to Kansas or Texas like most banks do. My underwriter sits 10 feet away from me. The best number for me is 646-228-2088. Again, 646-228-2088. And as I said earlier, my entire staff is bilingual. We're happy to help in any way, shape, or form. No question is a stupid question. Sometimes people are confused, they're uncertain. Please call me. I'm here to serve the community. I'm proud to be part of this organization, and any way I can help, I'm happy to.
Thank you so much, John. We really appreciate your insight. You help unconfuse so many of us, and I'm sure you'll be getting a lot of calls from our members and our network. We appreciate your time, and please stay healthy. Thank you.